Welcome back to the Pro Ticker Podcast, your Friday morning edition covering major financial magazine headlines, everyone.
It certainly has been a busy week.
It has been a busy one, and you know what really caught my eye? This whole situation with American Express. Amex, as most people know them.
Right.
Remember those Costco cards everybody loved?
Oh, yeah, those are great.
Well, it turns out Amex might have gotten a little too aggressive trying to hold on to those customers when their partnership with Costco ended back in 2016. The Wall Street Journal really dug into this, and
I saw that.
it's not a good look.
Not at all. $230 million settlement with the Justice Department is nothing to sneeze at.
Definitely not. And what's interesting to me is this wasn't just a one-time thing. The Wall Street Journal suggests that this aggressive sales culture at Amex,
Right.
it persisted even after the Costco situation was resolved.
Yeah, that's what makes it so troubling, right?
It's not just a few bad apples.
Exactly. It seems like there was real pressure within Amex to maintain those growth numbers.
Yeah.
Even if it meant bending the rules.
And from a listener's perspective, it makes you wonder, are other financial institutions engaging in similar practices?
Oh, for sure. It's a reminder to always be vigilant and do your research before you sign on the dotted line.
Absolutely. Now, switching gears to the global stage, China just announced that they hit their 5% GDP growth target for 2024.
Which, on the surface, sounds pretty good.
It does,
Yep.
but the Bloomberg article we have here points out that there are some underlying issues that are making analysts nervous.
Yeah, a big chunk of that growth came from exports.
Okay,
And that could be a problem with the potential for a renewed trade war with the U.S.
that's right. President-elect Trump has been pretty vocal about his protectionist policies.
Yeah.
So if he slaps tariffs on Chinese goods, those exports could take a major hit.
Exactly. And it's not just about exports either. China is dealing with some internal challenges, too. Consumption hasn't bounced back to pre-pandemic levels, and property investment is shrinking at a record pace.
So is China's economic miracle starting to show some cracks? What do you think?
It's hard to say for sure. China's government has a history of intervening in the economy, and they've already hinted at more stimulus measures. The question is, will it be enough to offset these headwinds?
That leads me to think about something else that the Market Watch folks were talking about, how Gen Z is investing.
Yeah.
You think with all the hype around crypto and meme stocks, they'd be all over those riskier assets.
You would think so, wouldn't you?
Yeah.
But a recent survey paints a very different picture.
Oh, really?
Yes, it seems Gen Z is actually more interested in cash and bonds than their older counterparts.
Interesting.
And they're more likely to adjust their investment strategy based on what's happening in the world, like elections or interest rate changes.
So they're taking a more cautious long-term approach.
Yes.
Maybe they learned something from the market roller coaster the past couple of years.
It's certainly possible. This generation came of age during the 2022 downturn, so maybe they're a bit more risk-averse. Plus, many of them are at that stage in life where they're saving for big things like houses or starting families. That requires a different mindset.
That's a really good point. It makes you wonder if this trend will continue as they get older and maybe have more financial security. Speaking of trends, the Wall Street Journal is reporting that the U.S. dollar has been strengthening. Why is that?
Well, it's a sign of the U.S. economy's relative strength compared to other developed countries. When the U.S. economy is doing well, investors tend to flock to dollar-denominated assets, like U.S. Treasury bonds, which increases demand and pushes up the value of the dollar.
So a strong dollar is a good thing, right?
It depends. The Wall Street Journal explains how a strong dollar makes imports cheaper, which is great for consumers who love their foreign goods, but it can hurt American businesses that are trying to sell their products overseas because it makes their goods more expensive in other countries.
Ah, I see. So it's good for some, but not so good for others.
Exactly. And it's also important to consider the role of the Federal Reserve. The expectation is that they'll keep interest rates higher for longer to combat inflation. That makes the U.S. even more attractive to foreign investors, which further strengthens the dollar.
And that ties back to our China conversation, doesn't it? A stronger dollar could make Chinese exports even more expensive, adding to their economic woes.
It's all connected, isn't it?
It's enough to make your head spin. Okay, before we get too dizzy, let's move on to a story from Market Watch about Philip Morris, the tobacco company. They've been granted permission by the FDA to market their Zyn nicotine pouches in the U.S.
This is an interesting one because the FDA emphasized that these pouches are not safe, just less harmful than cigarettes. Their decision is more about harm reduction than endorsing these products.
It's a bit of a mixed message, isn't it? Safer but not safe? How do you even market that?
It's a delicate balance for sure. And there are already concerns about young people using these pouches, especially since they come in all sorts of flavors.
Hmm.
The FDA is definitely walking a tightrope here, trying to balance public health concerns with the potential for harm reduction.
It's a complex issue with no easy answers, and it'll be interesting to see how Philip Morris positions these products in the market, especially with all the scrutiny on youth vaping and nicotine use.
Absolutely. Now let's shift gears again and talk about investment strategies again, specifically small cap stocks. MarketWatch had a piece on how they've been on a bit of a roller coaster ride lately.
They have. It's been a volatile start to 2025 for the markets in general.
It has. The iShares Russell 2000 ETF, which tracks the small cap benchmark, started the year down over 3%. Investors were worried about a potential pause in the Fed's interest rate cuts. Then we saw a bounce back midweek thanks to a consumer price index report that suggested inflation might be cooling off.
There's a little bit of good news for those who are starting to panic.
Exactly. Small caps, being more sensitive to interest rate movements, rebounded particularly strongly. But the big question is this sustainable or are we in for more volatility?
Well, some analysts are feeling pretty bullish on small caps, especially with the incoming Trump presidency. They're banking on his pro-business policies like tax cuts and deregulation to give smaller companies a boost.
Right, and remember that small caps tend to be more domestically focused. So policies aimed at boosting the U.S. economy could really benefit them. But there's also a healthy dose of caution out there.
Right. Not everyone's convinced this rally will last.
Exactly. Small caps are inherently riskier and less liquid than their large cap counterparts. And with so much uncertainty in the global economy, some analysts think this recent rally could be short-lived. They also point out that even if Trump's policies do boost the U.S. economy, the benefits might not trickle down to all small caps.
So it's a mixed bag. What advice would you give to listeners who might be considering investing in small caps right now?
I'd say do your homework. Don't just follow the hype. Look for companies with strong fundamentals, healthy balance sheets, and a clear path to profitability. And as with any investment, diversification is key. Don't put all your eggs in one basket.
Solid advice. Okay, let's take a break from the world of stocks and bonds for a moment and talk about something a little more exciting. Basketball.
Ooh, I do love a good slam dunk.
Me too. This story comes from CNBC. It seems a group of investors is pitching a new international basketball league that would rival the NBA.
Yes, and this is not just some fantasy league. They're aiming to raise $5 billion, and they've got some serious names involved, including Maverick Carter, LeBron James's business partner as an advisor.
Wow, that's a name that carries some weight. What's their game plan?
They're envisioning a league with both men's and women's teams playing in 8 cities around the world. Their model is similar to Formula One, spending 2 weeks in each city. And here's the kicker, they plan to offer players an equity stake in the league.
Ownership.
Yeah.
That's a game changer. What cities are they looking at?
So far, only Singapore has been confirmed as one of the 8. The rest are still under wraps. It'll be fascinating to see how this develops and if they can really challenge the NBA's global dominance.
I bet Adam Silver and the NBA are watching this very closely. What kind of impact could this new league have on the NBA and its players?
Well, if this new league succeeds in attracting top players and building a loyal fan base, it could force the NBA to up its game in terms of player salaries and international outreach. We could see a bidding war for talent, which would benefit the players. It would also create more opportunities for fans worldwide to enjoy high-level basketball.
It's a long shot, but it's definitely a story worth following. Speaking of things worth following, let's talk about the highly anticipated Nintendo Switch 2. Gamers went wild when Nintendo finally dropped a video teaser for the console. But, as MarketWatch reports, many were left wanting more.
Ah, the classic Nintendo tease. They're masters at building anticipation.
They are.
They did reveal that the Switch 2 will be backward compatible with current Switch games, which is great news for fans with extensive game libraries.
That is a relief.
Yeah.
But beyond that, it's still pretty much a mystery.
Exactly. They announced a presentation on April 2nd where they'll likely share more details, and there will be a public showcase in New York City shortly after, so we'll have to wait a few more months for the full reveal.
The suspense is killing me. But it's working, isn't it?
Yeah.
All this secrecy is generating even more hype.
It certainly is. Nintendo knows how to play the game both literally and figuratively. Now, before we get completely sidetracked by video games, let's touch on another important topic that came up in MarketWatch, the bond market.
Ah, yes. Bonds, often overlooked, but a crucial part of any diversified portfolio. What's been happening there?
Well, bond ETFs have actually been down in 2025, despite the recent rally in stocks. which is surprising because you'd think with all the uncertainty about interest rate cuts, investors would be flocking to the relative safety of bonds.
You would think so, wouldn't you?
Yeah, it seems investors are still a bit wary. Remember when interest rates go up, bond prices go down and vice versa. With the Fed potentially hitting the pause button on rate cuts, investors are hesitant to jump into the bond market right now.
It's all about timing, isn't it? Knowing when to buy and when to sell can make all the difference.
Absolutely. And with so much uncertainty surrounding the future path of interest rates, it's understandable that some investors are choosing to sit on the sidelines for now. Speaking of uncertainty, there's another big story swirling around with more questions than answers, the potential ban of TikTok in the U.S.
The TikTok saga continues. It's been a wild ride of legal battles, political maneuvering, and national security concerns. MarketWatch is reporting that both the current Biden administration and the incoming Trump administration are trying to find ways to prevent this ban from taking effect on Sunday.
It's quite the turnaround, isn't it? It shows just how complex and politically charged this issue is. The ban stems from concerns that TikTok's Chinese parent company ByteDance might be forced to share user data with the Chinese government, posing a national security risk.
But there are also free speech concerns and the potential economic impact of banning such a popular app. TikTok has millions of users in the U.S. and is a major platform for businesses and content creators. A ban would definitely have ripple effects.
Without a doubt. It's fascinating how this story touches on so many different aspects. Technology, politics, national security, free speech. It really highlights the challenges we face in a world where technology is constantly evolving and national boundaries are increasingly blurred.
Heavy stuff. So what's the latest on the legal front?
The Supreme Court is expected to rule any day now on whether to uphold the ban. If they do, it could take effect as early as Sunday. But there's still a chance President Biden could issue a 90-day extension, which would buy some time for negotiations and potential legal challenges.
So the clock is ticking. We'll have to wait and see what happens. Now let's step away from the digital world for a moment and talk about something a little more tangible. Retail sales. Bloomberg had a report on how they've been holding up despite all the economic headwinds.
Yes, it seems American consumers are still spending, which is good news for the economy. Retail sales rose a solid 0.4% in December, finishing a strong holiday season. Even more encouraging is the fact that the control group sales, which are a key indicator of consumer spending in the GDP calculation, climbed 0.7% in December.
So a sign of resilience in the face of inflation and higher interest rates. What's driving this continued spending?
Well, the job market is still strong with wages rising faster than prices. This gives consumers more disposable income. Also, consumer confidence has been improving since the election as people are feeling more optimistic about the future of the economy.
The Trump effect.
Perhaps. But it's important to remember that this increased spending could also be due to inflation itself. Since retail sales figures aren't adjusted for inflation, those higher numbers could just reflect higher prices, not necessarily more goods being sold.
Oh, the inflation illusion. It's a good reminder to look beyond the headlines and dig into the data to understand what's really happening.
Exactly. Now let's shift our focus to the UK. Bloomberg had an insightful article on the buy now, pay later market there. It's been booming, but now faces some potential headwinds.
BNPL has become incredibly popular, especially among younger consumers. It's a convenient way to split payments into smaller installments, often without interest or credit checks.
It is. And that convenience is a big part of its appeal. But as the article points out, this rapid growth has caught the attention of regulators who are looking to implement stricter rules.
Why the regulatory crackdown?
There are concerns that BNPL could be leading some consumers into a debt spiral. Since there are often no credit checks, people might be taking on more debt than they can handle, and if they miss payments, they face hefty fees and damage to their credit scores.
So it's a potential trap for those who aren't careful.
Exactly. The UK's Financial Conduct Authority wants to require BNPL providers to conduct affordability checks on borrowers, just like traditional lenders. They also want to ensure BNPL customers have the same rights and protections as those using other forms of credit.
So more responsible lending practices.
Precisely. This might lead to some consolidation in the industry with smaller players exiting the market, but it's a positive step for consumers.
I agree. Protecting consumers from predatory lending should be a top priority.
Okay,
let's wrap up with one last story from CNBC about Wall Street banks.
the masters of the universe.
They're expecting a surge in deal activity in 2025 after a record-breaking year for profits. They're seeing a surge in their backlogs of merger deals, and CEO confidence is at a multi-year high.
So the deal makers are getting ready for a busy year. And this isn't just speculation. There are some solid factors driving this trend.
Like what?
Well, the Fed's shift to an easing mode has created a more favorable environment for borrowing and deal-making. Plus, with President-elect Trump's election, businesses are optimistic about the future of the economy. They're anticipating pro-growth policies like tax cuts and deregulation, which could boost corporate profits and make acquisitions more appealing.
And we can't forget about the potential impact of reshoring. As companies bring their supply chains back to the U.S., we could see a wave of mergers and acquisitions as they try to secure their positions in the new economic landscape.
Excellent point. It's all about positioning for the future. And it seems Wall Street is betting big on a resurgence in deal activity.
That means big bucks for the banks, right?
Exactly. Mergers and acquisitions are very lucrative for investment banks. They generate huge fees for advising on deals, providing financing, and underwriting stock offerings.
So it's a win-win for the banks and the companies involved.
Not necessarily. Not all mergers and acquisitions are successful. Some can actually destroy value, leading to job losses and a decline in shareholder returns. It's important to remember that even seemingly good deals can be risky.
It's a good reminder to always look beyond the headlines and consider all the potential consequences.
Absolutely. The financial world is full of complexities and nuances. Staying informed and understanding the forces at play is crucial.
Well said. Now, speaking of staying informed, we've got more to cover in this deep dive. Up next, we'll blast off into the world of space exploration with SpaceX's latest Starship test flight.
Sounds exciting.
Stay tuned.
SpaceX sure knows how to put on a show.
They do. CNBC covered the whole thing. This was the 7th test flight of their Starship rocket, and let me tell you, it was quite a spectacle.
But the Starship is a beast, standing tall at 403 feet. It's the most powerful rocket ever built.
I bet those 33 Raptor engines on the Super Heavy booster made quite a roar during liftoff. So how did it go? Did everything go according to plan?
Well, the launch itself was a success. The Super Heavy booster even landed back at the launch site. That's SpaceX's second successful catch during a flight.
It's credible. It seems like they're getting closer and closer to their goal of fully reusable rockets.
They are. But there was a hiccup this time.
Oh no. What happened?
About 9 minutes into the flight, communication with the Starship's upper stage was lost. It seems the ship broke apart during its ascent burn, ending the mission prematurely.
That's a major setback. What does this mean for SpaceX's plans?
Well, setbacks are inevitable in any ambitious endeavor. What matters is how SpaceX learns from this experience. They're already reviewing the data to understand what caused the breakup. I'm sure they'll use this information to improve future flights.
They've always been known for their iterative approach and their willingness to push the boundaries. Speaking of pushing boundaries, let's talk about President-elect Trump's nominee for Treasury Secretary Scott Bessent. Bloomberg is reporting that he might face some tough questions during his confirmation, hearing about his stance on the dollar.
That's right. Bessent has advocated for a weaker dollar in the past. That could be a point of contention with some lawmakers. A weaker dollar can make U.S. exports more competitive, but it can also lead to inflation and weaken the purchasing power of American consumers.
It's like walking a tightrope, trying to find that sweet spot where you boost exports without hurting consumers.
Exactly. It'll be interesting to see how Bessent navigates this delicate balance if he's confirmed.
It's a high-stakes role for sure. The Treasury Secretary has a huge impact on the U.S. economy and its role in the global financial system. What else is on Bessent's agenda?
Well, he's also expected to address the issue of sanctions. They've become a major tool of U.S. foreign policy in recent years.
Sanctions have definitely been in the spotlight lately. We've seen them used against countries like Russia, Iran, and North Korea.
They can be a powerful way to exert pressure on foreign governments and individuals, but they're not without controversy. They can also harm ordinary citizens and damage the global economy.
It's a complex issue with both intended and unintended consequences. It'll be interesting to see how Bessent approaches this challenge. Okay, let's bring it back to the U.S. economy for a moment. Bloomberg had a report on how retail sales have been holding up quite well, which is surprising given all this talk of a potential recession.
It is. American consumers are still spending. Retail sales rose 0.4% in December. That's a solid finish to the holiday season. What's even more encouraging is that the control group sales, which exclude volatile categories like cars and gasoline, climbed 0.7% in December. This is a key indicator of underlying consumer spending and a positive sign for the overall economy.
So a sign of resilience in the face of inflation and economic uncertainty.
Yeah.
What's driving this continued spending? Is it just that people are feeling more confident about the future?
Well, the job market is still very strong. Wages are rising faster than prices. That gives consumers more money to spend. Also, consumer confidence has been on the upswing since the election. Perhaps people are feeling more optimistic about the economic policies of the incoming administration.
It could be, but let's not forget about inflation. It's still a major
Hmm.
factor. Those higher retail sales numbers could simply reflect higher prices, not necessarily more goods being sold.
That's a crucial point. We need to be careful not to misinterpret the data. A closer look at the numbers suggests that while spending is holding up, it's not necessarily booming. Consumers are still being cautious, especially with big-ticket items.
It's a reminder that the economy is a complex system. There are always multiple factors at play.
Absolutely. Now let's hop across the pond to the UK for a moment. Bloomberg had an interesting article on the buy now, pay later market there. It's been exploding in popularity, but now it's facing some potential regulatory hurdles.
BNPL is incredibly popular, especially among younger consumers. It's so convenient. You can split payments into smaller, more manageable installments, often without interest or credit checks.
It's a very appealing proposition, but that ease of use is also what's attracting attention from regulators. They're worried about the potential for consumers to rack up more debt than they can handle.
That makes sense. It's easy to get caught up in the moment and overspend when you don't have to pay the full amount up front.
Exactly. The UK's Financial Conduct Authority is proposing stricter rules for BNPL providers. They want to require affordability checks on borrowers, just like traditional lenders. They also want to ensure BNPL customers have the same rights and protections as those using other forms of credit.
So bringing BNPL in line with other forms of lending.
Exactly. It's a move towards more responsible lending practices. It might lead to some consolidation in the BNPL industry, but it's ultimately in the best interest of consumers.
I agree. Protecting people from falling into debt traps is essential, especially in today's economic climate. Now let's wrap up this segment with a look at Wall Street. CNBC is reporting that banks are anticipating a surge in deal activity in 2025.
That's right. They're coming off a record-breaking year for profits, and their backlogs of merger deals are overflowing.
So what's driving this deal frenzy? Are companies just feeling flush with cash and ready to make some big moves?
Well, the Fed's shift to an easing mode has certainly made borrowing cheaper and deal-making more attractive. But there's more to it than that. President-elect Trump's victory has instilled a sense of optimism among businesses. They're anticipating pro-growth policies like tax cuts and deregulation. They believe these policies will boost corporate profits and make acquisitions even more appealing.
It sounds like they're betting big on a Trump-fueled economic boom.
They are, and they're not just sitting around waiting for it to happen. They're actively pursuing deals, trying to position themselves for success in the new economic landscape.
And of course, this deal-making frenzy means big bucks for the banks.
Of course, mergers and acquisitions are very profitable for investment banks. They collect hefty fees for advising on deals, providing financing and underwriting stock offerings.
It's a win-win situation for them. They get paid handsomely for helping companies merge or acquire each other.
Yes, but it's important to remember that not all mergers and acquisitions are successful. Some deals can actually destroy value, leading to job losses and lower shareholder returns.
It's a reminder that the financial world is full of risks and uncertainties. Even the most carefully planned deals can go sour.
Precisely. And with the economy facing so many headwinds, it's crucial to approach deal-making with caution and due diligence.
Well said. Okay, that wraps up our discussion of the latest headlines from the financial world. But we're not done yet.
We're going to delve into the world of space exploration with SpaceX's latest Starship test flight.
Sounds exciting. Let's do it.
All right, so SpaceX, the company led by the ever-ambitious Elon Musk, launched its 7th test flight of the Starship rocket this week.
Yeah, this was a pretty big deal.
It was a bold attempt pushing the boundaries of space technology.
Oh.
The Starship, standing tall at 403 feet, is the most powerful rocket ever built.
I can only imagine the roar of those 33 Raptor engines on the Super Heavy booster. CNBC covered the event, and it looked pretty spectacular.
It was. The launch itself was a success. The Super Heavy booster even landed back at the launch site, which is the second time SpaceX has managed to do that during a flight.
That's incredible.
So
did everything go according to plan?
Well, not exactly. About 9 minutes into the flight, communication with the Starship's upper stage was lost. It seems the ship broke apart during its ascent burn, ending the mission prematurely.
Oh, no. That's a major setback.
It is a setback, but it's important to remember that setbacks are inevitable when you're trying to do something as ambitious as this set. SpaceX has already said they'll be reviewing the data to figure out what caused the breakup. I'm sure they'll use this experience to improve future flights.
Makes sense. Let's move on to a story that has more to do with earthly matters. Bloomberg has a piece on President-elect Trump's nominee for Treasury Secretary Scott Bessent. And it sounds like he might face some tough questions during his confirmation hearing.
You're talking about his past comments on the dollar, right?
That's right. Besson has advocated for a weaker dollar, and that could be a point of contention with some lawmakers.
Yeah, a weaker dollar can help make U.S. exports more competitive, but it can also lead to inflation, which isn't good for American consumers. It's a balancing act.
For sure.
hmm
What else is Besson expected to address during his hearing?
Well, sanctions have become a major tool of U.S. foreign policy in recent years, so that's likely to come up. They can be an effective way to pressure foreign governments and individuals, but they also have the potential to hurt ordinary citizens and disrupt the global economy.
It's a complex issue for sure. Okay, let's end our deep dive with one last story. It's about something we've been touching on throughout the episode. The U.S. economy, Bloomberg is reporting that retail sales have been holding up pretty well, which a bit of a surprise given all the talk about a potential recession.
It is surprising and encouraging, too. Retail sales rose 0.4% in December, which is a solid end to the holiday shopping season. And the control group sales, which exclude volatile categories like cars and gas, actually climbed 0.7% in December.
That's even better. So
Yeah.
what's driving this continued spending? Is it just holiday cheer, or are there more fundamental factors at play?
Well, for one, the job market remains strong, and wages are increasing faster than prices. This gives consumers more money to spend. Also, consumer confidence has improved since the election. People seem to be more optimistic about the future of the economy.
That makes sense.
hmm
But inflation is still a concern, right? I mean, couldn't those higher retail sales numbers just reflect higher prices instead of actual increased spending?
That's a great point. It's important to look beyond the headlines and really dig into the data. While consumer spending is holding up, it's not necessarily booming. People are still cautious, especially when it comes to big purchases.
Well, that wraps up our deep dive for today. We've covered a lot of ground, from corporate scandals to space exploration, from the strength of the dollar to the resilience of the American consumer. It's been quite a ride.
It has. And it's a reminder that the financial world is constantly changing and interconnected in fascinating ways. What happens in one corner of the globe can have ripple effects across the entire system.
Well said. Thanks for joining me on this journey through the week's top financial news. We'll see you all tomorrow morning with fresh headlines from major financial magazines.